Let's go. We live, loud and clear. Beautiful. Beautiful, 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 beautiful. What's going on, everybody? Lower this just a little bit. There we go. Like I'm short back here. Alrighty. For anyone that was on the live trading earlier, go check that out if y'all want to see a couple of trades that we took with roughly about 15, 20 minutes or so. But I did try to take like a little gold short off that 5,400. I think it's still looking pretty nice, but you really only need one micro. And if you don't know what I'm talking about futures. So I'm going to go ahead and get us started just in case anyone's rewatching. Welcome anyone that is clicking on our channel here for Stock Sermon Sunday. This is our weekly market analysis that we do every Sunday unless something changes or I'm sick or something happens. But we'll be here. I typically like to give roughly around a 10 to 15 minute buffer. So if you don't see me right at that 7 p.m. Eastern Standard Time, about 15 minutes is typically when we try to jump on just to get people ready, waiting, all those good things. So I need to get off this futures market because my gold entry was at 53.96 and that was roughly about 10 points there. So yeah, was profitable, but I got stopped out in profit. So need to get off of that right now. We are not currently in a trade, but yeah, got a lot to talk about tonight. So hopefully y'all are ready, got your notes ready, got your charts ready. If you were a complete beginner, new, all those good things. If you're rewatching later down the road, we'll send our newsletter out. If anyone maybe missed it, they can rewatch. We'll send that out. We got a lot to talk about tonight, and I'll try to make it as expedited as possible. So let me know where you're tuning in from as we get all the things up and ready for me to share my screen. I don't want anyone to miss anything, so I'll give people a little bit of time since I was slightly 15 minutes tardy. So I'll give people time to jump on in, get ready, and we'll get ready to go here. Hopefully everyone's had an amazing Sunday and weekend in February. It's crazy. It's already March. Yeah, already March. Wild times. Wild times. And of course, they would announce some news like this over the weekend. And since I'm speaking on a public platform, if anyone is affected or has any military association or anyone that is affected on the other side as well, if you are of different descent and across the country, I know we have people from all around the world. I want to send prayers out to you because, hey, we got some crazy stuff going on right now. So it's not always about making money and benefiting from this, but there are lives at stake. So we want to make sure that folks are acknowledged. All right. I'm going to post this here inside of our Discord really quick. Our earnings calendar, since we still got some earnings on the horizon. And then we also have our economic calendar. And as I'm on this, if you're trading futures, do your thing. But I am probably going to miss a trade because I am giving value. Probably going to miss a gold short is what I'm suspecting. Yep, probably going to miss the gold short. So watch that 5,400 on gold or MGC. You can scalp it with one micro and do wonders. Okay, so there is your trade idea if you're in the futures market. Mm-hmm. All righty, just posting this economic calendar here. Come on. Mm-hmm. This is why you do this before, Brian. So everyone doesn't have to wait on you, sir. Okay. This gives people plenty of time down below. Let me know something fun y'all did this weekend. If you hang out with the family, did some charting, enjoying the weather around the country, wherever you are. Or world. Alrighty, there we go. And I will have this up and ready here. All right. We are rocking and rolling now. There's my 5-minute buffer. Sadly, Stevens Point, Wisconsin, Miami, Marlin, what's going on, man? All right, folks. Happy Sunday. As I already said, thank y'all so much for being here, giving up of your time. I'm going to make this as expeditious as possible, but also as informative as possible. So if you have any questions that you want to get down below, ask, please let me know. If there is anything that you're looking at for this week as far as a trade idea, please let me know that as well. Any stocks that you're looking at long-term that you would like me to chart out, please let me know that as well. All right. Some custom indicators on Webull to save time charting. Beautiful. Okay. Don't start glitching on me here today. The tech has not been teching lately. The tech has not been teching. So let's jump on into this until, something crazy happens here. All right. All right, let's jump into it, folks. The first thing I want to mention really quick, just to get some house things out of the way. A lot of you have been asking about any boot camps or any type of educational pieces. I am trying to make it as easy and as palatable, if that's a word, palatable, as beginner friendly, intermediate friendly, advanced friendly as possible. Because I know it's not just me. You're maybe telling your friends, family, other people, and you want to refer them to different places. I definitely get that. And you may have them asking you questions like, I don't get this guy, or, I'm confused, and all those questions. So as we do, sometimes we try to make, another product or another way that people can get involved. So what we have done is we are going to be launching a boot camp. All right. It is a virtual boot camp. Saturday and Sunday because people do work. So that boot camp is going to be March 14th and 15th. Okay. It is going to be a paid fee. Unfortunately, for my Leverage University members, this is our founders rate right here. So there are limited spots. If you'd like to join, that is going to be a paid fee just because it is of my time. So I appreciate you all so much for being a part of live trading, all those good things. So if you'd like to jump in, please let me know. It's another way that you can get a little bit more one-on-one time, a little bit more kind of come in, get more of like a structured educational piece where you have recordings. Feels like a course. There's going to be recordings from that as well. Each session is going to be right around 90 minutes. So we're looking at roughly around 3 sessions. So imagine yourself going to a master class or a boot camp over a weekend, and you kind of have a lunch break and you come back, that type of thing. So just kind of, we'll talk more about it. I want to give people enough preparation time 2 weeks in advance. I know that might be during spring break time. I don't have any kids, so I apologize for that. But you can still get the recordings if you're not able to join. Okay. So that will be available after this live. Okay. The link will be available. This price will change. Okay. This price will change. This is a founder's rate, an earlier rate. I'm going to probably keep it up for around maybe 3 to 4 days. So maybe Wednesday, Thursday, I'll keep it up. Maybe just this week, I'll keep it up. And then it will go up to $397 for that. All right. If anyone's new, it'll get you 1 month access as well into live trading. So if you pay this fee, right, you can join us for 1 month inside of Leverage University, plus get the boot camp, and then you can you decide if you want to continue with us or not. So for anyone in Leverage University, if you aren't able to join, or if you have someone, and that's cool, if you don't want to, I will be doing a very small referral for this as well. So If that is of liking to you, just let me know and we'll talk about it inside of our Discord. But just wanted to mention that there our Edge Bootcamp options and futures. Day one's going to be on options. Second day is going to be on futures. Okay, cool. Let me check the chat. Everyone good with that? Yeah, in-person Vegas, we're going to be doing that. So it'll be available. The link will be available after the live here. So I apologize for, I don't know why it is glitching yet again, but hopefully you can just continue to hear me. Yeah, we're going to do another one live in Vegas, but I need to give people enough time. So we will do one here live in Vegas. So give me some time, Sherry, to get that all together. I want to give people plenty enough time, but I want to test this virtual one out first, see if people are intrigued, and then we'll go from there. Beautiful. Awesome. Awesome. Cool. So we'll talk more about that. If you have questions, just message us inside of our WAP platform, or you can message our DMs after this. However you can get in touch, just message and say, hey, I'm interested. Where do I go? If you're confused on links, all that kind of stuff, but it will be available right after this. If you already see it, you're more than welcome to join. All right. Cool. Let's jump into it. So first thing we want to talk about is this whole situation. I tried to get ahead of it yesterday, and if I'm popping in and out, I can't see myself. So I do apologize if it's glitching back and forth with my face. I'm not sure. Maybe it's the I have all the works over here. Okay. So we got full Wi-Fi. We got full everything. Okay. And maybe it's the cord. Who knows? So I'll check that out. Make sure we're good for next Sunday. All right. So let's go into our fundamental analysis, which is what's going on in the world right now. Okay. So what I'll do is I'll jump on the futures market here really quickly. And I know we're jumping straight into the charts, but I want you to notice right here, and I'm not going to click the buttons for anyone if you are, hey, okay. So I'm on gold right here. Okay. So everyone was kind of expecting like what's going to happen with the market when we open up on Monday, what's going to happen? We can kind of get a sense in the futures market before the market opens up for the New York trading session tomorrow morning. And if you can see here on the charts, here's where the open was today. Okay. And do you see this is gold? We gapped up and then ran on gold. Okay. If I go into the futures for our S&P 500, you can see we gapped down and we are continuing down. So in the morning, if we don't recover, you can expect SPY to be down. If you're already looking at your Robinhood right now and you're already seeing it, right? You can see that we are down already in the SPY and the QQQ and most likely in the IWM as well, okay? So this is an effect of this weekend's Israel, US, Iran war, okay? Now, the question is tomorrow, do we have kind of this Black Monday, this black swan? Do we continue selling is the question, because we've already been selling pretty aggressively since the NVIDIA earnings. So my expectation tomorrow is probably we will have some continued selling, but as always, trade with the trend, but be careful of traps at the lows as we could V-bottom back up and bounce potentially, okay? So we'll watch that tomorrow. In our live trade room. If you're able to join us, we'd love to have you. If you join the boot camp, like I said, you'll be active with us for a month in there and then continue on from there. If you want to join us, there's a 7-day trial for $25 as well. Okay. So we'll be live in the trade room. I think it's highly important to understand how this March starts off, because it is going to be very, very volatile. And there's going to be a lot of emotions attached, meaning, man, we're going to sell off. This is going to be crazy. And then we wick back up and we wick back down. And it's going to be very, very volatile in these conditions with this global trade war going on. Okay. So emotions are involved. People might panic sell in the morning. They might open up their long-term brokerage and start looking at stuff, right? It's going to be a lot of kind of rolling around. Very similar, if you remember, to the tariff announcement in March of 2025, as well as what else? The pandemic of 2020. So you're getting this sentiment around this March, April time that we could have some tax harvesting, some profit taking, some acceleration, potentially to the downside. But as always, stocks don't go straight up and they don't go straight down. Okay. So just wanted to show you that on the charts here. If we look at MNQ or NQ really quick, you can see that that also gapped down, and then we're just moving sideways in the after hours. Okay. So right now I would look for 24,800 as your, and I'll talk about that on QQQ and SPY when we get into our options and the overall market. But that 24,800 looking like a solid resistance for right now. If we're underneath that, we'll probably continue down to the lows. If we reclaim that, we'll squeeze back up probably towards that 25,000 again. All right. So just want to mention that very quickly as we just kind of get a sentiment of what's going on in the futures market in the after hours. Okay. Cool. I'm down a trip to Vegas. I got a timeshare down there anyways. Yep. In person will be dope. Yep. So we'll get that going. I've run 2 masterminds for leverage before. So this time we'll be focused more so on trading. But yeah, we'll definitely get that going. So we'll test this virtual event. If it goes very well, then we'll do an in-person, and it may be back-to-back. Who knows? We'll see. I just want to give people plenty enough time, book flights, come in, hang out for a weekend, go out on the strip, do whatever you want to do, maybe go out to dinner, all that kind of stuff. So we'll get some interest on that inside the community. Cool. All right. Here we go. Let's jump into our economic calendar because we still need to pay attention to that, even though we got this war going on. All right. On Monday, March 2nd, we got PMI manufacturing at 945, ISM manufacturing at 10. If that data comes in fairly good, we could have a pop back up to the highs and we fill that gap. Tuesday, we have a lot of Fed speakers, so a lot of volatility there with a lot of Fed speakers still wanting to cut rates, still maybe seeing some positive things that they may want to do with the overall cuts in their next FOMC meeting, okay? We have Wednesday, ADP, so a lot of labor market data this week, which we know is highly, highly important for the overall market of how people are doing with their jobs. Okay, we got our weekly initial jobless claims, ISM, PMI is going to be extremely volatile, which is really good for money-making opportunities. But we also, as we know, have to be patient for our setups, watch our levels because the volatility is wicking up, it's wicking back down. It's very, very wide. Okay, the price action is moving very volatile. So you have to have wider stops. I would lower your risk size a little bit to start off the new month. Let's get green to start off the new month and yeah, get going. All right, here we go. On Friday, looks like we have an NFP report. That's going to be interesting. U.S. unemployment rate, last NFP report, not the best. And then we had PPI on this last Friday, which showed higher inflation. So if we're going to some type of stagflation, if we're potentially going to have another rate pause or maybe some more rate hikes, I'm really not seeing them cutting rates if this war continues to go on. I don't think the Fed wants to step in and do something drastic as potentially this war and government shutdown is still kind of lingering here. So we want to be mindful of that all this data is leading up to the next FOMC meeting, okay? The next FOMC meeting. I do believe I put it in here, the dates inside of our Discord here. So the next FOMC meeting is the 17th through the 18th. Oh, that'll be good. So if we do that boot camp on that Saturday, we'll have preparation for that FOMC meeting. That should be fun. That should be fun. Also, I'm trading futures a lot more during this volatility during March. So keep up to date with that. We're going to be in our futures channel. I'll still be trading options. That is my bread and butter. I love it because the S&P 500 and NASDAQ been very choppy lately. Okay. So what I've really been liking is the IWM personally. Really, really been liking the IWM. What is going on here? Did I go away again? Y'all got to see my face. Okay. Y'all got to see my face. All right. And the vibes. I set this vibe up too nice for this thing not to be. All right, there we go. All right, let's keep it rolling here. Go ahead and put your questions down in the chat if you want me to go over something specific. What I'll do this time, because a lot of times we're talking about day trading and what's going to happen this week, and that's all well and good, but in our weekly master classes that we have inside of our Discord, we always bring up the fact that we want to keep a bigger picture in mind. What that means is that a lot of you are like, man, I wish I would have gotten Netflix, right? I've been talking about buying Netflix shares. I think a lot of investors have been talking about Netflix underneath $80 has been just an absolute great buy, right? So dollar cost averaging on Netflix, if you grabbed up Netflix shares, you're in a very, very good position. Could Netflix pull back underneath 90 if we have some type of correction? Yes. So my rule of thumb is don't chase, okay? Especially if we have some type of correction with the overall market, Netflix could pull back with it, which gives you another opportunity to get in, okay? So Netflix is one of my top and has been my top risk to reward blue chip companies that was a great buy and still is a great buy underneath $100, okay? So just wanted to mention that right off the top, but we'll give some more here. I'll talk about SoFi. We're talking about that inside of our Discord. SoFi stepping up here underneath that 18. This was a buy zone that we had. So we want to talk about that a little bit. And then I also have Palantir kind of on watch around that 125, 130 level. Okay. Let's go into our earnings calendar really quick. Berkshire Hathaway on Monday before open. We have Big Bear AI. A lot of questions about that. I'll just be watching it. BBAI. Everyone was hype on BBAI. We'll just see how their earnings report. Target, I think it looks great, personally, as far as a good risk to reward, kind of alongside of Walmart. C has always been interesting to watch, so I haven't looked at that in a while. I'll take a look at it. CrowdStrike going to be a big mover there on Tuesday. Might be a good trading opportunity Wednesday morning. Personally, I know people may not have been paying attention, but we called Abercrombie and Fitch out a while back. And that's just from my retail experience in clothing during pharmacy school and in undergrad. I worked at, J. Crew. If you know my story, I was a men's J. Crew kind of suiting stylist. So was suited and booted, but Abercrombie got J. Crew's designer. So if you've noticed Abercrombie, just go look up. Is one of the best retail returns and rebrands probably in a while. Okay. So that has been a great one. I'm not saying buy it. I'm not saying hold it. I'm just saying be interested. Maybe go and look at the company because most people wouldn't even think of that. Okay. Just go look at it. Broadcom, that is going to be a major mover there with NVIDIA. Semiconductors, Broadcom, Okta might be interesting to watch. Rigetti as well. Webull, I got my eyes on because Webull, very similar to when we called out Robinhood underneath $10. I think Webull might have an opportunity if it gets its stuff together. Great earnings, but just cannot get a bid back above that $10 level. It's currently sitting right around $5 to $6. Okay. Kroger has always been a staple there. JD, I've had my eyes on. Kind of the Chinese Amazon there. Costco should be interesting. So just kind of keep my eyes on. Nothing really major here. I think the big watch as far as trading would be Broadcom and CrowdStrike. All right. Cool. Awesome. Let's jump into the SPY here. Okay. Let's jump into the SPY. Let me check. Where we are. I don't think it's showing on Webull in the overnight session. Yeah, 683. Okay. If you watched my video yesterday, I talked about SPY and what we potentially could happen. I want you to look at this, okay? And if you didn't watch the video yesterday, look at how similar these two look, okay? Look at this consolidation from last February going into March. And then we had tariffs and then a correction. Look at this. Isn't that ironic? Roughly the same type of look. Okay. So if I do some type of expansion here and measurement from 2023 into there, that's roughly 50% expansion with a 20 to 21% correction. If I pull this from the top, and if this is the top here, it's roughly right around the same 43% roughly. And if we pull back for a correctional move, there will be 20% down to 570. Okay. So We've got a little ways to go. What does this mean, Brian? Should I load up puts? You got two opportunities. I would not say load up puts until we get confirmation. Some people have. There is a lot of put interest, potentially put to call ratios. But again, it's been so volatile, so wicky up here. Every time we think we're going down, we bounce back up. Every time we think we're going up, we come back down. So it's not confirmed yet. But what I would do if you are not interested in trading the downside is essentially just get ready for this type of move if that happens. Well, what does that do? That gives you an opportunity to get into your potential bigger swing trades or your leaps or buying shares a little bit better positioned. Okay. I always say, and our community asks us this all the time, it doesn't mean don't buy like at these highs. And what I'm just talking about the overall market. Okay. Because if SPY and QQQ pull back, it's the S&P 500. It is the NASDAQ 100. It is inclusive of your top companies. So if we do get a correction, what do you think is going to happen to Apple? Correct back underneath $200 potentially. What do you think is going to happen to your Tesla? Correct back underneath $300 potentially. What do you think is going to happen to your Google? Correct back underneath 250 again. Okay. What do you think is going to happen to your Amazon? Potentially correct back down underneath 175. You get me? So these aren't bad buy areas for your favorite top companies, your blue chip companies that you dollar cost average in. But I'm just saying, if the market does correct, you're going to get the correction from your top companies to go even further down. Because most people are thinking that this is the bottom. If someone were to ask me and say, hey, Brian, give me a definitive answer, yes or no, do you think this is the bottom? I personally don't. I personally don't think this is the bottom for a lot of these blue chip companies, right? Which is a great thing. That means if you're picking up dips for your shares or whatever you have, or maybe you're just sitting on the sidelines watching, right? It could be a great opportunity. So I'm just talking long-term, big picture right now. But if this is the bottom, then we continue to trade and we continue to be positioned and we do our thing. Now, does that mean that everything is going to correct even further? No, not necessarily. We could have things that have hit their short-term bottoms, such as maybe Netflix. Netflix may only have gotten to 70 to 75. Why? Because its weekly RSI was already oversold. Last time we were on a weekly RSI was back in 2022 at 16. At that time, it was $160 because Netflix did a stock split. But $16, $17. Okay. That was the last time the RSI, the oversold level, came in on a weekly. Okay. And we ran all the way back to the highs. Okay. So Netflix might have reached its immediate bottom at the short term. Okay. So you might be able to say, hey, Netflix is here, like around this zone, 75 to potentially $90. Okay. I want to get interested if you have not already gotten positioned. Okay. We talked about, and I'm going to give this to the public YouTube community. We talk about this inside of our Discord a little bit more about strategies of how to invest a little bit. If you maybe can't buy Netflix full, the full actual Netflix, you can look at the leverage version. Now these are, a little bit more risky or whatnot, but they are cheaper. Okay. So when Netflix was at $70, NFLU, okay, NFLU was at $20. Okay. When Netflix was at the highs, okay, of $150, NFLU was at $74.49. Okay. So just gives you people an opportunity, and most of your favorite stocks have some form of leveraged ETF. Okay. So we talk about that more inside of our Discord, inside of our community, just to make sure people are doing it properly. But if this is new to you or you haven't heard about it, just take interest and kind of look it up. Type in anything with a U. So if you want to look AMZU, that's Amazon. Okay. Amazon, when it's at the lows right here, right? You would like it ideally underneath 20 for the leveraged ETF. When Amazon was at the highs, or when it goes back to the highs, this will roughly be probably $50 plus. Okay. So it just essentially gives people an opportunity to get into their favorite blue chip companies that maybe not have a lot of money, or maybe want to buy shares and buy 100 shares, 50 shares, but maybe don't have or don't want to invest into the full and still get the same move, okay, with equity. So just want to mention that. TSLL is another one. I can keep going down the line. We do TSLL a lot with Tesla. Typically buying TSLL underneath $10 is the best opportunity. So if Tesla pulls back, TSLL will be $7, $8, $9, $10. You roll TSLL double up back to 20 when Tesla recovers. Okay. Cool. All right. So let me give levels on SPY because I did not do that. Okay. On the daily chart, we want to keep an eye on that 680 mark. That is going to be the line in the sand of how we start off March. Do we hold 680 or do we break 680? If we break underneath 680, ideally, we're probably going down to 670. Okay. There might be a little bit of a pit stop at 675, but ultimately we get underneath that 680. We're probably headed down into 670. 670 is our line in the sand, in my opinion. That is our make or break. Do we hold 670 and recover in V bottom off the lows? For those that don't know terminology, V bottom just means we come down and immediately V bottom like that. Okay. Now, if we continue down further underneath 670 and we do something like that, okay, then that's where the corrective move starts happening. Now, here's another way that we could get down lower because I do believe the corrective move will still happen, but there's another way we can get down to the corrective move. Remember, a correction is roughly 10% from the most recent highs. So what if we, Dr. B, you said, this is all support down here. Like, what if we go back up? We could go back up, pop, go back up to the highs, retest, fail back under, and that's where it starts. Right? So we still want to respect the channel that we're in for right now until we get confirmation that, hey, there's a flush coming, there's a correction coming, there's, or a breakout, whatever way it goes. But there's definitely could be buyers that step right back in, just how everyone was hyped on NVIDIA, like, hey, NVIDIA, crushed earnings. We're going to break out to all-time highs above 700. And then what did it do? The seller still stepped in and sold it right back off. Okay. So that's kind of telling that the market's a little bit sensitive. If I were to, again, have a bias, I think regardless, I'm not really interested personally in the breakout trade, like more new all-time highs. I'm really not interested in that. I think it might be good trading, but I still think there can be traps up because we have been, again, we have not had a significant enough pullback from the lows of last year. March of last year, a year, we've been going technically straight up, right? So think about that the market does not go up in a straight line. It needs to, and it should pull back to reset and allow big money to get back in, drive that momentum back up where they want to buy it, right? And in my opinion, it looks very trappy up here, okay? Well, what does that mean? Okay? When retail investors get so on one side, i.e. us, retail investors, right? How many new people have come in and said, I need to learn how to trade. I want to learn how to trade. There's been it's like kind of like 2019, 2020, 2021. If y'all remember that, if you haven't been trading that long, or if you don't remember, kind of remember like all that trading stuff that was happening in 2020, 2021, when everyone was either losing their jobs or couldn't find things and they start searching for how to make money online and they come across trading. Okay. It's very, very similar feeling to that. I've been trading since 2018. It's a very similar feeling. Okay. So my community knows I've kind of been on this hesitation, kind of bearish side really since like middle of last year, right? Middle of last year. So I'm like, we still haven't pulled back. We've been grinding higher since, and it's fine. That's great for the long term. We've been grinding higher for 6-7 months, and we had one pullback of 1 month in November. That's not significant enough. We need another correction. Okay. So it feels very similar. Why'd you pull up Bitcoin's chart? Because what was everyone talking about when everyone was like, man, everyone was pulling up their portfolios. Everyone was talking about Bitcoin. Man, we're going crazy. 126,000 is going to 150. I'm like, What would I do? Which we talked about Bitcoin underneath 30,000. Okay. It feels very similar to this, right? 2021, everyone gets so hype up here and then it pulls back and corrects and go into the bearish market territory. 2022 was yet again, we talked about it before. You're hearing me on repeat, but I know I have new people. We're in a midterm year. So I'm not saying that I know what's going to happen, right? Last year it was tariffs. 2020 was the pandemic. 2022, it was rate hikes. What's going to happen now? So us traders or investors that have been in the markets for a while, we don't know what it is. It's just the charts are telling us something that says something's fishy. So when we keep mentioning this, it doesn't mean be afraid. It just means be cautious. Okay. That the risk to reward up here on Bitcoin at 126, 125,000 that ran from 15,000 to 125, it's going to have a corrective move. SPY running from just say 500 to 700. It's going to have a corrective move. Right? So if you just screenshot this chart right here, or you draw it for yourself, look at the similarity. Look at the similarity. Okay. I feel like I'm broken record now, but are we good? Can I get a 1 in the chat? Everybody good on that? So we got 680 on SPY this week. Let me zoom into the 1 hour chart really quick. And some of y'all are probably trading futures. Okay. So I get it. Okay. So in the morning in our trade room, what we'll be looking at is a potential move into this 680 and see if it holds. So right now we're at roughly 683. If I see a gap down into 680, I do believe there'll probably be some traps. Okay. Because it always has been happening as of late. There'll probably be some traps, and then potentially we hold 680 and then roll back up here to the highs and maybe retest and fill some of those gaps, because there will be 2 gaps that will need to be filled in the morning. Okay. There will be a gap down in the morning, and there will be the gap that happened on Friday. Okay. So we could come down to these lows, 680, reclaim 680, and then roll right back up. Okay. So that's something that I'll be looking for potentially tomorrow, is saying, hey, we may start off March a little bit of a recovery, and then it settles in, and then we decide where we want to go. Just my opinion, but we'll react tomorrow. Okay. QQQ 600 is where I'll be watching. The first line in the sand will be 600. And then into that 598 has been roughly around the area where it's been holding. Okay. Now QQQ again gives me a different look here, because on an hourly time frame on Qs, it looks pretty interesting. And in my opinion, it looks kind of bearish consolidation underneath this 613 level. Okay. Just my opinion for right now, but we'll have to see. Let me take off all these things here for right now on Qs. If I look at this grind right there, it's kind of giving me a little bit of bearish consolidation and something like that. Okay. But again, until it happens, we'll just react. So if we hold 600 and we do the same thing with SPY, we hold 600 and then we rip right back up and we're right back in a channel, then we're just going to hold the channel. And if we reclaim, okay, cool. Hey, see, we're not going down. Well, remember that look I was telling you just a moment ago. Could we go all the way back up to the highs and then still set a lower high and then reject there like that? Okay. So don't get it twisted. If I see it going higher, does not mean, hey, are you switching your, no, I'm still not switching my sentiment up here in this range. Personally, I will still trade short term, but I'm still looking for that corrective move. Does that make sense, everybody? For my seasoned folks that are listening, maybe y'all get it. Just because something happens in a day or 2 days, hey, it's green, we're going back up, does not mean I've changed my bigger view. Okay. All right, IWM. I still have a corrective move on IWM if we get back underneath this 255. Okay. If we break underneath 255 on IWM, in my opinion, we're probably going back into the 230s. Okay. IWM, as you can see, is consolidating up here in this area. IWM is very indicative of what we call a risk on market or a risk off market. If the small cap companies, that's what IWM, Russell 2000, the small and mid cap companies are doing well, then the market's most likely going to hold up. If we start seeing IWM break down, okay, that's a little concerning because now no one wants to keep these mid cap and small cap companies in their portfolios as much as they were. They're too risky. They want to risk off, and then we pull back, and then the market kind of gives that sentiment, and then we pull back. Okay. Let me go back to the corrective move here in 2025, which was right here, 228. You can see we were pushing new highs. We finally broke lower high there, correction right there. That was 23%. Okay. If IWM breaks down or consolidates, breaks down underneath here, 23%. I mean, we could come down into the lower 200s. Okay. So not expecting anything yet, but just wanted to put it in everyone's mind, kind of like, it's very tough when you're on public platforms and YouTube and stuff like that. When you put something in, it's like, what if this doesn't happen? But if y'all been watching me for a while, I appreciate the comments on the NVIDIA thing. It's just patterns that I've seen for a long period of time and still learning new patterns. So how did you know NVIDIA was going to pull back after earnings? That's just a pattern I've seen over and over and over again. So I'm just trusting the charts. NVIDIA couldn't get above 200. It was going to reject, and it pulled all the way back probably to 170. Okay. My mark on NVIDIA is still that 150 mark. So if we break underneath 170, I still got 140, 150 for NVIDIA to pull back to. Okay. All right. We've gone over the indices. All right. So I want to answer any questions that anyone has. Yeah, it does look bearish. Yeah, it definitely does. So my seasoned folks, my long-term investors, my traders, y'all all get it. We're on the same page. I just want that sentiment to be in everyone's mind so we don't get distracted in the short-term periods. Okay. So I'm gonna go over my top setups here for the week potentially. And one setup that we took on Friday that I think has the best risk to reward. So if we do pull back, what I typically look for in my live trading room and for my trades on options more specifically, if we do pull back, I want to see which ones have not yet pulled back. So I feel like I'm still chasing NVIDIA to the downside if it just keeps dropping, right? Because now it's dropping into support. I can't find an entry. It's just going to gap down again and go, gap down again and go. For those of you that know me, I like to trade risk to reward. If you're a momentum trader, it's like, Brian, it's going down, just trade puts. That's your prerogative. Okay. I like to trade risk to reward, knowing where my risk is. So one trade that I took on Friday that I really, really liked, I scalped it twice for over 100%. The first trade was roughly 40%. And then the second trade was over 100 and it went damn near 300%. Okay. Was Apple puts. Okay. Now Apple has been holding up relatively strong as big money investors and retail investors are saying, hey, Apple's a stable company. I can trust it. It's not as volatile as some of the semiconductors and others that are pushing AI. It's been an AI leader, kind of like Google as well. I can trust Apple's free cash flow, and Apple has been holding up very well. But if the market corrects, I want you to look at this pattern here on Apple on a, let's see where it is. Last time we had a correction or a pullback, I want you to look at this area right here on Apple. Okay. I want you to look at this on Apple now. Do you see a little bit of the similarity? See that lower high there? See this lower high here? Okay. And what did Apple do once it set that lower high on a weekly time frame? It pulled back and corrected to retest the low. Pull back and corrected, potentially retest the low. So where does that pull Apple back to potentially? Would be breaking underneath 260, retesting back into 242, 243. If it breaks that, then we've got lower there into a corrective move. Okay. So just my opinion there on Apple. I think it's a really good risk to reward. I like that weekly top tick candle right there. How that, kind of inverted hammer or shooter candle, setting a lower high on a higher time frame. I like that on Apple for a good risk to reward. I can control the risk up here. I'm looking at 270 really being that line in the sand. Okay, so watch out for 270 on Apple ideally, okay, being that resistance for right now. Okay, cool. Let's keep it rolling here. Put your respective stocks down in the chat if you'd like. I think Google also can kind of be very similar to Apple, where Google is also a little bit overextended, but has been an AI leader and really has not pulled back ever since its extension over this kind of 208 or $200 level. Okay. If I look at it as well, Google also looks like a little bit of a head and shoulders potentially. If you're not familiar with patterns, that head and shoulders is a little bit more of a bearish pattern, being that the neckline is sitting right at roughly 297 to 300. The left shoulder and right shoulder being right around that 320, 322 area. So I'd watch out for Google as well. If the market does pull back, Google and Apple could be a really good risk to reward back to the downside, as those two have been leading the AI race and leading the movement to the upside and have really not been pulling back as of late. Okay. But again, they've been strong, so you got to respect their strength. But if the market pulls back in any type of way, in my opinion, Google and Apple would probably be the best risk to reward trades to the downside, okay, for puts. If I pull on the moving average stack here, you can see that cross right there as well. You would call it somewhat of a death cross. I don't pay too much attention to it, but I do have it in the back of my mind. I don't get too technical on the crosses and the moving averages. I trade price action, but I am always, if you haven't checked out that moving average video, very well aware of where the moving average stack is. So do you see that daily 20 and daily 50 moving average cross right there? Last time we had this to the downside was right here. Do you see that? Back at the same time on Google, we crossed, we got up underneath it, and then we continued selling and pulling back. Okay. And we do have some gaps down below as well. So I will not be shocked. Okay. Very similar to Oracle, very similar to a Palantir. I will not be shocked if big tech pulls back drastically. I've been through a bear market. Some of you have been through even worse during 2008, situations like that. Like, I will not be shocked if this gives the whole 2025 move back. I'm not even going to be shocked. People are like, what's going on with the market? I'm like, this is what we've been preparing for. Just be prepared. Right? So I have to have my mind ready for that, because when that happens, everyone and their mother goes into extreme panic. And I'm just going to be over. See, we talked about this 3 months ago. When did we talk about Bitcoin pulling back underneath 70,000? 3 months ago. So I'm not shocked. So you prepare for the worst, hoping for the best. Just my mantra. Prepare for the worst, hoping for the best. So you know what your plan of action is if it does happen. See all these gaps down below? And I don't know when it happens. And that's why I'm mentioning this video now at the beginning of March, because if I get messages saying, Dr. B, it's down, what's going on? We talked about it, guys. Ladies, we talked about it. What's your plan? Well, I guess I'll get into puts if I see Google underneath 295, and I'll get in some puts, taking underneath, 280, 270, 260. If it pops back up at the highs, I'll trade it up and then back down, whatever it is. Okay. Cool. I mean, you told us. Yeah. It's not even, y'all know me by now, hopefully. It's not even I told you so. It's just I want people to see that what we're talking about comes to fruition, because it now builds more confidence in your own analysis, right? Once you see it, you can't unsee that, right? You're like, oh my gosh, it happened. Now you become a believer. I think some people get on too much on their high horse, like, see, told you so. It's not about that. It's about empowering people to see things for themselves so they become believers. Right. So let's keep going here. Amazon, a lot of gap fills back to the upside. I could see Amazon potentially, holding up very well. It all depends on the market, but Amazon is kind of like Netflix. It's holding up very nicely on this moving average here. If Amazon continues to hold 200, I would still be a little bit more on the slightly bullish side on Amazon. But again, if the market pulls back, Amazon's going to pull back with it. So what I'm going to be watching on Amazon is just probably that 212 mark right there, that daily 20, to see if it reclaims and gets back above, or does this turn into bearish consolidation and then we roll back down underneath. So you can see those lows right there turned into resistance at 212. Okay. Microsoft, software has been getting hit. If I look at IGV, okay. A lot of concerns with AI, so on and so forth. If Microsoft pulls back even more, keep buying more. Okay. It's just no brainer, but software, or IGV, is the ETF to track software. We want to watch this on a weekly time frame here. What it does at this weekly 200 moving average is a major point for the software sector to hold up, because if we do not hold that up, we can start going into a very corrective move. So again, Microsoft, I think it's at a great level. I wouldn't get too overly bearish on software, things like that, because very similar to Netflix, at any point in time, you're like, hey, I can't time the bottom. This is what is that? 30% off the highs on Microsoft. I know it's a big player, so if you can't do that, Microsoft, MSTU, I think it is. Yeah, MSFU. The Microsoft bullish, if it pulls back underneath $20, maybe into the teens, you could look at that as a leveraged ETF there. But Microsoft, as far as trading, I would consider it still weak underneath that 200, but I wouldn't get too overly bearish down here unless you just see a break of the lows of 381, and then now you can take it down even further. But Microsoft, just a little bit too close to that big support for me to continue to be interested. Like I said, risk to reward better on maybe an Apple. We got a gap fill on Apple right there, down to 250. And maybe even Google, potentially, if it breaks underneath that $300 mark. All right. Let's jump into some of these semiconductors here. Broadcom, we've got earnings. So a lot of the semis, very similar to NVIDIA, will probably chop around until Broadcom or sell off. But NVIDIA, I would look at this 170 to 172 mark. That is kind of that gap fill we've been talking about for a while, and I have not, respectively, I just couldn't catch it. I literally, I think I told y'all on here that I want this gap fill. I think verbatim, I said I'm going to be involved, that this will happen. Right? I think verbatim, whether it was here or whether it was in our trade room inside of our community, I said I want that gap fill on the video. I didn't know if it was going to go from here down or pop back up into earnings and then come back down, but that gap's getting filled. Right? So I may have missed it. I mean, I need a pop if, NVIDIA, if you need NVIDIA weakness underneath that 180 and underneath 184. Okay. That 184 is right here. Okay. 183, 184. Okay. So if you can catch NVIDIA down a little bit more underneath this 180 and use that kind of as your level, 179, 180, and catch it down into this gap fill there, down into that 174, 172 area, and fill that little imbalance gap, then great, scalp. Okay. Once you get down into here, I'd be very, very, cautious about trading down into that area because it is extremely oversold. And then if SPY and Qs bounce, then it could just rip right back up and we're back into the channel. Very similar to here. Okay. So watch out for that on the video. If it gets too close to that support, I'm probably just going to wait it out and then maybe switch to potentially scalping some calls back up. All right. Especially if Broadcom performs or outperforms or something like that, that could send the video right back up. Okay. AMD has been still relatively weak here. But I really don't like what AMD has been doing underneath here. It's been just kind of just faking people out underneath here. So I'm not really interested. It's still above this daily 200 moving average right there. Probably get more interest on the downside if it breaks underneath that. But in here, if it's still holding, it could easily just rip right back up too. Like, you just never know. So just respecting these supports. I'm not really interested in anything in AMD underneath here. It just has not been good price action. Just rolling down, then ripping back up, rolling down, ripping back up, then ripping back down. Really not interested in that personally. All right. Let me check the chat. Make sure everyone, no questions, no nothing. Or is it still rolling? Okay, cool. Palantir. This is a big one that people have had questions on. And it is gapping up. Wow. Okay. So our idea is working already, folks. Posted this inside of our community, inside of our trade ideas, and it's already happening. So Palantir with this, I kind of expected it with the war and defense and involved in government contracts and so on and so forth. So Palantir might have a nice recovery off of these lows. So you can see right here in the after hours session, it's already at 142 above that 140 level. The daily 20 is sitting right here. It's been basing right here at 130, kind of curling up. You can see the trade idea that I already have. I already have a Fibonacci back up to roughly around that maybe this breakdown here, 165. Okay. So if Palantir gets above and holds above 140, which is already above 140, you can maybe see a retracement back up to that 150. Okay. If it starts getting back above 150, Palantir might be back and it might be rolling back to that 170 plus mark. Okay. I also like Palantir back to the upside because it also has a daily MACD cross back to the upside as well, along with an overextended RSI that is curling back to the upside and getting more bullish there. So Palantir, as all this kind of bearish action and so on and so forth, there's still potential bullish squeezes back to the upside. So Palantir might be on top watch tomorrow. If it doesn't leave us in the dust already. Okay. So Palantir, look at that above that 141, 142 level, which is already above. 145 is your next target, then 150. So keep Palantir at the top of your watch list. Okay. Oracle, still watching Oracle. It could be like a Netflix type of situation. I've just been really, really watching Oracle. I think it needs some kind of positive catalyst, something. Still has a lot of concerns in the software space, AI, the amount of debt they have. But anytime that stuff happens, like I think Oracle is a $200 plus stock. You know, this could be an opportunity if you're interested. You know, just keep it on watch. If you're unsure, dollar cost average in some shares, not financial advice, but I would definitely keep software, any type of those companies, do a little bit more fundamental analysis, use your AI tools to type in and say, hey, what's a good value for Oracle, so on and so forth. Ask it questions. If you want more insight, we have it all inside of our community as well. All right. I'm still keeping Datadog as well on my watch. I think Datadog is personally a $200 plus stock, but it's valued at 180. I think that's the analyst price target on it. It is 80 to 90% profit margins, good free cash flow. Go look at their business model. I think Datadog is just all this AI concern about software. Is it going to be obsolete? So I think Datadog is a sleeper, had great earnings. So I like it down here in this area. I think it could be back up to 140, 150 very quickly. So keep that on watch. Anything software, anything, slightly AI. I just keep it on watch there. Okay. I will start closing us out here at the top of the next 5 minutes or so. Okay. If there's anything that you'd like me to cover, please let me know. But I will go over some of our financials here. Hood, SoFi, maybe even PayPal mentioning for a lot of people that are interested in maybe is that going to recover. So Hood, I'm really just following Hood alongside of Bitcoin. If Hood can pull, it looks very similar to Netflix's chart, to be honest with you. Hood came back to a great retest level of the $70 mark. Okay. If Bitcoin does pull back even further, then Hood could just, turn over, rotate back down underneath $50. So just be mindful of that. But I think this is a great area for oversold. If I go into a weekly, it should be oversold on a weekly. Getting to it. Okay, oversold on a RSI there, slightly on a weekly, on a daily, extremely oversold, and on a daily, it's starting to curl just slightly here. Okay, so I would consider this a little bit more in support. You could get a short squeeze back up into, the 80s, 100s, got a couple of gap fills there back to the upside. If we do get some type of, I think a positive catalyst or something probably sends it like that, kind of like it's just lingering, and then you see Hood back up. I think that could be an opportunity there. All right. SoFi. A lot lot of questions around SoFi. I think it is in a buy. It's in my buy zone too. Okay. You can kind of see right there around 1 was around $20. Buy zone 2 was 15 to 17. And that was right at that moving average. And we're pretty much there. Okay. So SoFi, what does this mean? I can't tell you financial advice, or if I'm not coaching one-on-one and whatnot, or you're not in the community, take it for a grain of salt. But I think SoFi right here for shares is a great opportunity. $16 to $17 if you are not already in SoFi underneath, 10 back down here. Okay. Does this mean for leaps? Leaps are always, I think it's a great opportunity potentially, but you still got to have stop losses on your leaps. If we break underneath $15, I think we could see the 12s, but I don't want to talk about that until it does it. But I think right here, very similar to how everyone was so bearish on Netflix, and then it just had positive catalysts and we're back up and you're like, dang, I should have bought some. So keep SoFi right here on your watch around $16 to $17. I think back above $21 is where you really get that squeeze, but it would do something like that probably out of nowhere, just a short squeeze out of nowhere, in my opinion. So yeah, keep SoFi on your watch right there, but still bearish action rolling over for right now. Okay. Hey, Tarina, what's going on? So I will go ahead and round us out here. I think we covered most of the things there. I appreciate you all so much for being here. Again, if you joined in late, rewatch. But we do have our boot camp that will be the March 14th through 15th, Saturday and Sunday. And if you have any questions around that, please ask. I'll stay on here for 1 more minute for any questions down the chat. And I will see some of y'all inside of live trading tomorrow morning. If you've been away from us for a while, right, and need to return to us, you're always welcome back. You're always welcome back. Cool. Just checking the chat really quick. All right. I think we're good. All right. I will answer any questions. Let's take a look at the futures market really quickly before I leave. I'm going good. I'll watch the replay. Beautiful. Beautiful, beautiful, beautiful. Let's check the futures market really quick. Oh, wow. Got that squeeze back up. Dang. That's probably why y'all weren't paying attention. Y'all probably trading this squeeze. I knew I was going to miss a trade. Knew I was going to miss a trade. My goodness. Wow. Should have kept this up to the side. Break back above that 68.30. That was a 50-point move, roughly. Wow. Gold probably also went to the downside. Yeah, roughly. Yeah. My entry was right up here. 53.96. Beautiful. Great. Great. Let's see here. Since y'all didn't join me on live trading earlier, let's see if there's maybe a little bit of a scalp trade off these even lows here back to this oversold level. Let me just go back to a 1 minute chart there. 68.50. See if we can scalp something really quick. Maybe just a little bit of an oversold pullback. I don't like trading it as this strength, but I'm going to use that 68.50. It's probably consolidating into some type of bull flag here, but it's in the middle of a gap. But I think personally, yeah. Go into a 30-minute there. It's kind of retesting that 68.60. So we got a full gap fill all the way to 68.70. Let's see. This will be fun. Right before we end here, let's see if I can scalp a little bit of this 10 points. It seems like every time I get in a trade with y'all, I'm in a consolidation and the move eventually happens. So for those of you that are not too familiar, this is futures, or this, yeah, that's the right terminology. This is futures trading. Okay, so essentially right now I'm trading MES or ES, the micro version, which is the S&P 500. So if you're not too familiar with futures, it's just like SPY. Okay, just like SPY, but you can trade this 23 hours of the day. Okay, so when people ask, well, when can you trade and all this stuff, and I'm busy. Okay, well, futures and options. That's what we'll be talking about in our boot camp in 2 weeks. See if we can get underneath this 68.48. My entry was 68.48.50. Just looking for a counter trend pullback here. Just in 3 micros. On a 1 minute time frame. I do not trade 1 minutes on on options. Talked about that earlier. I do like the retest of this the 68.60 level there, and I'm looking for maybe a pullback back into 68.40 here. Just a lot of that squeeze strength off those lows. Might add to this potentially if I see a breakdown underneath that 68.45. Man, why's my nose itching so much? This is a cool way to end. Wish I would have caught that big squeeze while I was talking to you all. Running my mouth here. Just consolidating here. We're coming up into the next kind of hourly or 30-minute candle roughly. Next 8 minutes. Can I catch 10 points really quick? Give me a like. Let me know down below if you enjoy this. What we'll start doing is maybe doing a little bit of, I don't want to extend the weekly market analysis, but we'll start doing a little bit of maybe futures trading in a different live, roughly 30 minutes before this live. So let's see, get a break below these 45s. I want to add to it, but I swear I'm not always trying to short the market. It just seems it always is in a resistance by the time I look at it. It's like, dang, this dude's trying to short the market even in futures. All right. VWAP is all the way back down here at the 68.30 mark. Really want to see it get underneath there and flush. Okay, that's a nice candle there. See a little bit more to add. Still haven't set a stop loss yet. Still a manual stop loss with this price action. So really want to see it hold underneath that 68.50. Okay, new lower low close. See a little bit more of continuation. I could definitely take my little lunch money here, but again, just I feel like our entries are pristine. Yeah, just I like that wick off that 68.60 level. Nice little falling wedge, short squeeze. Now just looking for a little bit of a pullback back into these 68.40s. I'll see a little bit of aggression right here, and I'll add to it a little bit. Get away from my entry a little bit more. I can see it get under 68.45, maybe add a little bit. Yeah, I'm also I usually work my way up to one full mini in this volatility, but since this is a Sunday night session, lowering the risk, maybe just getting up to about 5 micros, which is half a mini or half a full contract here. I might just wait until these next 3 minutes. I don't know if I want to add into this next candle close. I can already kind of predict questions from anyone that's learning. I'll get it a lot of times in our trade room. Inside of our Discord is, Brian, isn't that like a bull flag? Like, why would you trade against the trend? Yeah, it technically could be, but if I get on a bigger time frame, and I'm okay being wrong, but if I get on a bigger time frame, got that big expansion right there, and we got a full gap fill back up in a 68.70. Most are probably looking at this expansion, trying to buy this dip right here and then extend it up to the highs back again, which I definitely understand. So my intention for this was essentially just to, have a little short scalp on it for a pullback, because the bigger idea is that strength expanded up. But if we get, that 15-minute up, it didn't retest these previous lows right here, which were, again, support becomes resistance. So that's kind of my indication right there, right off of those, just trying to see if I can get a continuation. But you can see here that bottom wick on that candle getting kind of bought up right at my entry. So I'll begin, if I start seeing it, then I will just manually stop out. If I see some expansion down to the downside right here, we take out that low. That's where I'll add. Yeah, kind of getting bought up right off my entry. This always happens. I don't know if that's a good thing or a bad thing. It's like I'm pretty much entering at the battle zone right where all the action is happening. My entry is always, for those of you that know, it's like my entry is always right at the battle zone action. That blue line is my entry. And I'm wanting, for those that don't know this and just watching, like, I don't know what he wants to happen. I'm in a sell position. Okay. So I'm looking for, or would like this to continue to the downside underneath that blue line. Okay. My stop loss will be above these highs. So I already see it kind of, retracing back up to the highs. So I really don't want it to get back above 55. So I'll go ahead and set that stop now. And probably will get stopped out. Just right at my entry. So this future session is just going to be a break-even session. Yeah, it's going to get stopped out. It's too strong. Yep. Cool. All right, folks. We had a green session earlier, and then just wanted you to see live on the trade right there that right at my entry. So that confirmed that that was a support area right at the 50s, 68.50, and potentially that wants to revert back up to fill that full gap. If not, this will be a double top, and then I'll be correct, and then it'll roll back down to the downside. Look at that. Oh my gosh. Hold on a second. That's crazy. Wow, look at gold. What a short on that. My gosh. Should just entered 1 micro on gold and did the live and then just look back. Entry was at 53.96 on gold. My goodness. Well, this will be good for the morning because, that means probably we're going to get a short opportunity for the morning. If this reverts back up to the highs, there will be probably shorts waiting to short the market in the morning. Cool. All right, folks. I will see y'all in live trading. And also, if you need, do you have preference for options or futures? Do I have preference? No, not necessarily. There's pros and cons of each. What I do like about options is that the fact that you do have options, meaning I can trade Apple, Google, Nvidia. Like a lot of times there's better trades on equities, like on the actual stocks. Sometimes there's not the best trade on indices. Like you're only limited to gold. And some people like that. They don't like a lot of options. They don't like a lot of things. They'd rather just pay 3 or 4 things. Yep. Yeah, I'm done, Sherry. I'm done. So I'm just break even, right? So, but it's also cool to show people a trade idea, right? It's also really cool to show people a trade idea because And a lot of people aren't in our community yet, and they want to see someone live trade. They want to see it, how it works, all that good stuff. It's fun to trade. I watch live tradings too. So we'll do more of those on the channel. But I still am trading. Is the boot camp in March? The link says November. Let's change it. Yeah, so that's why I'm going to have that ready to go, Sherry, right after I click off of this. So I will change that, and I'll be ready to go right afterwards. So yes, it's March 14th and 15th. I will pull the link right back up for everybody. March 14th and 15th. There is the link right there. Can everybody see that? March 14th and 15th. That rate will be there for roughly around 3 to 4 days. I think I set it for like 4 days, so maybe pretty much till Thursday or Friday. So just make sure you jump in for that. After that, it will go up to $397. So, yep, no change for anybody if you're already inside of Leverage University. If you are not, for our live trading and all that good stuff, then you can jump in for a month, and it will go from there. If you have any questions before clicking a link, before purchasing, anything like that, just like Sherry asked, please just ask us either on my Instagram that is linked right down below, or you can ask inside of WAP in our support chat if you are already there. I will send out a newsletter after this as well, so check your emails if you are on our newsletter. Okay, we good? Don't want anyone any confusion. I'm not here to take your money. I do trade and make money on my own, but it is of my time. So that's why we charge a fee, and to see who's serious, right? So I appreciate everyone for the support, giving as much free value as I can on the channel, but I do want to separate for those that actually want to take it outside of here and learn. Okay, cool. Awesome. Y'all protect your accounts if you are trading futures. We'll have a lot of opportunities.